The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
Welcome back to another Daily Dots. Chase here with you on Wednesday, June 11th. I'm going to rip through the markets, talk a little bit about data and a little bit about news. And then I'm going to cover one company that I personally like right now that we have invested a little bit in. Not like a big position by any means, but just kind of walk you through a company I like and why. So start out markets. S&P down 0.27 today. You're at 6,022. Can't remember if I said it on the show or not, but until you have OPEX next week, options expiration, there's so much money kind of that's going to sort of make you gravitate pretty close to 6,000, barring a big enough exogenous thing to bump us off that. I think we'll be within 200 points of 6,000 for the next week or two, at least week. NASDAQ 100 was down 0.34. Small caps are down 0.4. Equal weight down about 0.3. Mag 7 down 0.85. All world ex-US was up 0.03. Crude oil up 4.68%, and I will cover that coming up. Gold up 0.9. Silver down about 0.8. Platinum up 2.5, was up 5 at one point, so kind of pulled back to hit 1242 is a big level for it. So when it blasted like 1275, 1280, whatever, I was like pretty surprised by that, because 1205 and 1242 are both pretty big levels. Now we're back to that 1242 line. So we'll see how this goes. We've gone straight up here for the last month. So I think platinum, even palladium to a degree, probably have to digest what's been a very strong move to this point. Copper futures down about 2%. Bitcoin down a little bit, but still over 108,000. On the dollar, one of the bigger stories on the day, down about 0.4%. Still barely holding on to a kind of little bear flag that it's built. But it won't take much for us to be, holding a 97 handle, in my opinion. In yield land, the 2-year was down about 7 basis points, the 10-year down about 5, and the 30-year down a little over 1. And that is because of the data, which I'll touch on. We had CPI come in pretty cool, especially on core. It's the 4th month in a row that core has come in lower than expected. So there's a lot of chatter about how the Fed's late. The Fed needs to get to cutting. And I don't think that's a crazy thing to say by any means. Inflation has weakened pretty substantially in the last few months. But at the same time, I don't think it's crazy to kind of want to sit here and wait to see. I think one of the mistakes people are making is like, oh, well, this May data shows us that there is no inflation coming from tariffs. The reality is the tariffs literally just started. So that's not going to be in the data from May. Now, 3 or 4 months from now, if it's just not feeding through in any meaningful way, then I think the Fed should stop worrying about that and just get to cutting. But we cannot write off tariff impacts for inflation at this point, especially if oil keeps going up, as I've mentioned a few days ago. And on that note, I think the reason you have oil going up is geopolitical, which is always my least favorite reason for it to go up. But I will say, as often as I push back on geopolitical pressure on oil, this one feels at least a little bit real, because the U.S. is actually doing some evacuations of personnel in the Middle East. I know, like in Baghdad, they're pulling some people out, which all stems from essentially the deal that we are negotiating with Iran right now. If the deal were to go through, they get big sanctions relief. We get to, make sure they don't build nuclear weapons, and get to at least keep an eye on their enrichment. Now, the big sticking point is enrichment. For us, it's like, hey, you don't get to do that anymore. And for them, they're like, that's a red line for us. if you want to bomb us over that, that's fine. Go ahead. But we're going to keep our enrichment. And at the moment, the U.S. position is, okay, well, maybe we'll just bomb you then. And their counter to that is like, okay, well, if you bomb us, we're going to hit all of your assets in the Middle East. So that's why you're seeing people get evacuated, which the fact that people are going through the trouble to, reduce headcount in the region suggests we may be pretty serious about going through with some strikes on their nuclear program. And we know that they will hit back, and we want to make sure we limit the damage on that. So that's not a crazy reason for oil to go up, obviously, with all of the oil production in places like Saudi Arabia and in Iraq. And it's an oil-rich region. So if you had a significant amount of kinetic escalation in the region, you could actually have oil production and oil distribution impacts. So that's something to keep an eye on. I have said for a long time, really since the election, that I thought it was possible that we would get a deal done with Iran. I still think that's possible. I think there's middle ground that makes sense between you can't enrich and yes, we will. That isn't that hard to agree on. So I still actually, I know it's a weird thing to say today, given everything I'm talking about, but I'm actually still of the mind that they can actually get that done. But if they don't, and we do actually bomb them and they do actually hit back, then that could be a real catalyst for oil short term. At the same time, OPEC's adding 400,000 barrels every month. That's a tough environment for oil to move meaningfully higher. This is going to be a short one today because I only have two other things to kind of talk about. I'll skip the company I'm going to talk about. I'll mention that here in a minute. But the other thing I want to talk about was the former finance minister from Canada came out and basically said, we should upgrade our ties with China as a way to balance all of our U.S. risk. Obviously, that's going to ruffle feathers in the U.S. Europe has kind of done the same thing. My thing with that is in the position that they are in, it is just the logical thing to do. We were basically the only game in town for Canada for trade. It makes no sense for them to keep it that way, given everything that's transpired. So they have to diversify trading partners. They have to diversify who they depend on, who depends on them. Obviously, the biggest trading country in the whole world is China. China needs natural resources. The one thing Canada's definitely good at making is natural resources. So the whole thing makes sense. With that said, I don't expect Canada to go do any massive, deal with China that puts, our national security at risk or anything like that. But something of note today that I found a bit interesting, and I expect more of the countries, the U.S. pressures on things like trade. I think the kind of counterbalance that makes sense for them is to kind of well, that's fine. We'll just replace whatever that was that you took from us with China, because that's not good for us. That's why some of the criticism was I think is good, is the go make, get all your allies together and come up with a plan and then go to China instead of, not only going at China alone, but actually going at China and those same allies instead of putting them on your team first. But water under the bridge, I suppose. The company I want to talk about today is Nike. Nike has been beaten up, been frankly in a tailspin here for a while. The stock chart looks terrible. It's one I've been interested in for a long time. I just like anything that's a good brand that gets beaten up. It makes me interested. I just naturally want to buy it because good brands tend to recover. The former CEO did a pretty big strategy shift, and I think the whole thing just blew up in their face. And in some ways, I think the strategy shift made sense. It just didn't work. And that was get our stuff off Amazon. There's a bunch of fake stuff on Amazon, things like that. It's just kind of diluting our brand. So we'll just bring it all in house. We'll make a great website where you can order stuff and we'll ship it to you. We'll let everybody come to us. Nike was known for always being in a bunch of stores, having their best products front and center in the store. So you always knew what the best stuff was, when it was coming out. But when they kind of pulled everything behind the curtain and put it on their own website, the average person wasn't going to Nike.com and checking all this stuff out, right? The average person is on Amazon, is going to the mall and looking in shoe stores, and they had a lot less shelf space in shoe stores, and they usually kept their best products off those shelves. Now they're going to kind of unpivot and go back to Amazon first and foremost, which they're going to sell a ton of shoes on. They're going to go back to physical stores in a bigger way. They're going to kind of put less emphasis on their own kind of e-commerce site, and trying to drive traffic that way. And I think this is all exactly what they should be doing. I think it's going to be a good strategy that's going to help them a lot. So I think the new CEO, the turnaround story, and speaking of, the new CEO has worked at Nike for like 30, 40 years, has done like, I don't know, over 10 different jobs at Nike. Started off like, a fresh young like college intern or college grad, like entry level work, like, and just worked through like almost every department the whole way up. So person understands the culture, person understands the product, that's kind of what I want, leading an organization. So I think so far the moves have been right. Like the stock isn't like, in my opinion, reflecting some of those changes yet, but that's one of those things where, you get a couple quarters of guidance getting better and profits picking up. And next thing you know, people start paying attention and the stock starts to move. And the other thing, which I have mentioned on the show before, that I just cannot get away from, is the explosion of women's basketball and the stardom of Caitlin Clark are things that the sports world's taking for granted, and Nike themselves are still taking for granted. Like Caitlin Clark doesn't get her signature shoe. She's in year 2 in the WNBA. She doesn't get her signature shoe until next year. So she'll be a third-year person before they roll out her shoe. To me, that's just a tragic mistake. She's wearing some like Kobe Bryant shoes in the meantime, and they're selling well. But I think when she gets that signature shoe, and they're talking about making it in men's and women's, I think that thing's going to sell like crazy. I think the brand for young women is going to do something it's never done before. Men already tend to like Nike. I think they started to lose women. They started to lose the running culture, a lot of things like that. I think they have a decent avenue for getting just about every angle of their old customers back, and then a lot of new customers, especially as women's sports continues to expand and grab eyeballs. Like if you see some of these ratings numbers from some of the WNBA games, especially if you get a Caitlin Clark, Angel Reese game or something like that, or New York playing Minnesota, some of the best teams with star power, you like they're competing with Major League Baseball, with the NBA. Like they're literally right up there. And this is still with these women making, sub $1 million per year contracts. Like, I mean, they just recently started to fly nicely and stay in nice hotels and stuff. Like this is a league that was basically, nothing for 20, 25 years. And now it's just exploding. A lot of it is because this just whatever reason, the star power of Caitlin Clark has transcended the sport. But I don't think it's just that. Like people are watching the other teams too. Like it is just becoming a better product, a better sport, more interesting. The women are more interesting than the players, and the storylines, the competition is great. Like I just think it's a arrow pointing straight up that I think Nike is eventually going to figure out. Like, oh, we have this massive asset kind of under our noses. We got to start fully developing it and putting our time and effort into getting this right. Because if they do, I think it does a lot for their brand and their branding, and then by extension their sales. So keep an eye on Nike. Like it's beaten up. You looked at the chart, you wouldn't want to touch it with a 10-foot pole, but typically a lot of the charts I like to touch are those. So something to keep an eye on. It's not like some big investment for us, but just a turnaround story, which tends to be something I find interesting. Anytime a great brand gets its stock cut in half, like I'm at least going to take a look. And in Nike's case, I took a look and I liked what I saw. But That's it for today. Tomorrow we will have PPI, as well as jobless claims. And jobless claims is pretty important. Like whatever PPI, like inflation is not that important to me until, I don't know, about 2-3 months from now. I'll start paying really close attention. The Fed's on hold. That's not really going to change in the next month, even with the weaker inflation, I don't think. But jobless claims could change their mind. I don't think inflation's going to, because I think they want to see the full impact of tariffs. But at the same time, if jobless claims kind of keep surprising higher, the way CPI keeps surprising lower, that would get the Fed's attention. Like, I don't think they're trying to watch the unemployment rate go from 4.2 to 5 before they kind of get off the starting block by any means. So, with the last 2 or 3 jobless claims reports have been a little bit concerning. Yellow flag, like I've said. So I'll be watching to see if we get another yellow flag, or we kind of go back to being okay, or obviously, a nasty 280 print, something like that, a kind of more of a red flag. But that's it for today. We'll be back tomorrow. Don't forget, you can download and subscribe at knowyourriskpodcast.com. And we're everywhere. Mostly, I would say, go to YouTube, but we're also out Instagram, TikTok, you name it. And that's it for today. See y'all tomorrow. Cheers.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.